Chairman at the podium, gavel like a guillotine. Tongue got the power of a detonated mezzanine. Red tie tight like a noose on liquidity. Markets doing yoga, stretching volatility. Dots on the chart looking like crop circles. Every word he says turn the crowd to feral. Tongue slip once, pension funds evaporate. Blink wrong, $1 trillion do the paper shake. He don't need drums, just syllables. Every sentence coded like biblical. Hawk shadow stretching over NASDAQ floors. Dove wing flaps got the shorts at war. Whole world leans in. Futures flinch when the consonants bend. Every moves oceans of capital. One vowel away from a moon or a casket, yo. Listen, index finger hovering over the switch. Green or red, same man flip the script. Heartbeats sync to the press conference feed. Prayers type fast in the Bloomberg screens. Bow top, market switch. One word make the whole thing flip. Either rip straight past the stars or drill to hell. Margin calls. Bow top, market switch. Tongue hit different when he speaks that shit. Either rockets light the dark or it's blood on the chalk. Suit press clean but the vibe is violent. Silence louder than the riots. Mic check sound like a starter pistol. Funds run faster than a hostile missile. S&P holding breath like a hostage. Options chain looking nauseous. Gamma squilling like tires on ice. Every hedge fund praying twice. He say data dependent, that's a spell. Market rated like heaven or hell. Past performance, that's a fairy tale. Forward guidance, sharper nails. Algo stutter, screens go white. Traders blink, lose months of life. He clear throat, portfolio flips. That's not a cough, that's apocalypse. No beat drop, just heartbeat noise. Grown man pray to unemployment claims. One man, one mic, one chair. Whole planet strapped to his cadences. Powell talk, market switch. One word make the whole thing flip. Either rip straight past the stars or drill to hell. Margin calls. Powell talk, market switch. Tongue hit different when he speaks that shit. Either rockets light the dark or it's blood on the chart. This ain't a speech, it's a weather event. Flash flood gains, a drought level rent. Every headline pre-written in fear. Just waiting on a verb to appear. Say it. Green candles stretch like skyscrapers. Shorts evaporate, see you later. Moon talk ain't science fiction. Just rate cuts mixed with superstition. Or red's green, sirens blaring. Group chats quiet, death start clearing. Same mouth, same suit, same grin. Different word, different sin. This ain't love, this orchestration. Decimal points, recognitions. Printer gold still haunt the room. Every pause smell like perfume and doom. Powell talk, market switch. One word make the whole thing flip. Either rip straight past the stars or drill to hell. Margin calls. Powell talk, market switch. Tongue hit different when he speaks that shit. Either rockets light the dark or it's blood on.
Oh, brother, oh, brother, oh, brother. Welcome
welcome back to a specialty episode of the Matt Kohrs Show where I'm a little low in my seat, but we are high in spirits. In a mere 10 minutes, count them out, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, we're getting the Fed interest rate decision where with 99% confidence, we can say there's going to be no change to the Fed fund rate. Where it's going to get exciting is the write-up from the voting members. What do they have to say? What do they not have to say? And then also at 2:30, the chairman of the Fed, Mr. Jerome Powell, will be doing his public press conference, which is really where I need your help. I'm sorry to rush the show, but you already know that we're not getting a rate cut. But that doesn't mean we can't obviously we can make some money, which is why I need to turn it over to this right here. First of all, 99% chance of no cut today. No cut, no hike, no nothing. We're staying exactly where we are. But, and this is where I need your help, so please get your fingers ready, type away. We're gonna make some bets, folks. We're gonna bet on what will Jerome Powell say during his January press conference. So I figure let's look at some of these interesting ones. I'm willing to bet a full $1,000 on this. So we could honestly just rip it. Before we get voting, I do want you to know that in the last one, there was a lot more no's than there were yeses. There really were. Like we were sitting there and it was a lot more of not saying it, not saying it, not saying it. So with that in mind, I'm going to need your help and we're going to kind of rip this stuff. Like for example, do you think he's going to say pandemic? I know some of these seem obvious, but last time we did this, he was not a chatty Cathy. He was not saying these things at all. So when it comes to pandemic, are we going yes or are we going no? Okay, so we're going no on that. So we're going to throw $50 on that one. Cool. All right, submit. All right, what about tariff inflation? Tariff inflation, yes or no? Tariff inflation, just instead of writing yes or no, please write the word just because there's going to be a delay. And folks, we have 8 minutes. This ends at 2 p.m., so we got to be faster. So please type out the name of the thing we're talking about and then yes or no, just so I know. And I'm just going for the first person. Someone tell me tariff, yes. Tariff inflation, we're going to slap a $50 bet on that one. All right, what about credit? Are we submit? Are done? How are we feeling about credit? Credit, yes. Credit, no. Trump, no. Where was Trump on this? He's not going to say Trump. Credit, yes. Tariff, no. Credit default swaps, credit, yes. Okay, we got the yes in on. All right, we'll get the credit in on that. Okay. What the fuck? All right, let me reload the page, apparently. Where are we at? We are yes on credit. You guys wanted yes on that. We're going for credit. All right. What about dissent? Dude, dissent's a no. We thought he was going to talk about dissents before, and he didn't. That's a clear no. He's not saying dissent. Quantitative tightening. That's a no. We're going for no's. The no's were the smart bets last time. We're slapping some no's in. Beige book, recession. He's not going to utter the word recession. He is not going to utter the word recession. I can guarantee it. Subpoena. Dude, I don't think he's going to talk about the subpoena. He doesn't really like to, someone said median. Median, you guys were feeling confident on him saying median? All right, we'll slap a yes on median. Probability, volatility. Dude, he really just wasn't a chatty Cathy last time around. We're going to get some of these no's, and I think that's where the money is. Trump, he's not saying Trump. You think, all right, we could put some money down on this one. Do you think he's going to say Trump? This is the big one, folks. We don't have much time. I need everyone to use all their brain power. Do you think he's going to say Trump? Def not. Should we do $500 on this one? Is this our super bet? Is this our super bet right there? Done. We took a fat no on Trump. Pardon. He's not talking about getting pardoned. All right. Done. We have $94 left on this one. Where do you think a good yes is? Where are you guys feeling? Goods inflation, softening, president, layoff, AI, restrictive, balance sheet, uncertainty, unchanged. Where are you feeling softening? We're seeing softening, hardening. Where goods and shutdown, the government. Are you feeling shutdown? Administration. Where was administration? I didn't see that one. Which one are unchanged, restrictive, projection, restrictive? Restrictive. All right, you guys are feeling good on that one, so we'll slap a 94. We'll slap the rest of the money on that one. All right, we're down. I only have 65 cents cash left. We got some bets. They are live, and we are feeling good. All right, we took yes on credit, no on dissent, yes on median, no on pandemic, no on pardon, no on quantitative tightening, no on recession, yes on restrictive, no on subpoena or subpoenaed, yes on tariff inflation, no on Trump, no on volatility, and the big bet is the $500 bet, no on Trump. Half the account is basically saying, do not say the word Trump. That's what we're doing. That's the word we do not want to hear. You know, last time around, I learned my lesson. I was cheering for words. I had a lot of yeses going. You guys talked me into a bunch of yeses, and I ended up slightly down. We made some good bets. I was able to get out of some early, but at the end of the day, the guy was just not saying the words you thought he would say. So we're taking that as a learning lesson and we're applying it to this situation where we're taking a bunch of no's. That's the lesson I learned last time, is the words that are maybe kind of like a little spicy, a little dramatic, like getting us into it. He wasn't saying them. He was not saying them. So imagine my life if he comes out, he's like, hi, good afternoon, everyone. I would like to dissent on the concept of pandemic-related recessions that might lead us to quantitative tightening, and then he's going to get some questions. Are you getting subpoenaed? No, I'm not getting subpoenaed, and if I do, I'm going to get a fucking pardon because screw that guy, Trump, and I don't give a shit about this volatility. Yeah, there is a chance that is said. Those could be real sentences that come out of his mouth, but we're just hoping that doesn't happen. So those are the bets. Read them and weep. I'm already down $40. Recent. I don't know. This is a bug. I don't know what that is about because I funded the account with $1,000 like minutes ago. So I don't know how it says that I'm down $3,000.97. That doesn't make sense to me. You could see all my bets. All right. So there's a little bit of a bug there because the portfolio was only 1,000. I bet 1,000. So I don't know how I lost 3. So I don't know what that's about because I just funded it. But regardless, these are our bets, and we're going to literal rip today. So that's what we're cheering for. We're listening for credit. We're listening for median. We're listening for restrictive, and we're listening for tariff inflation. And other than that, we're looking how it goes. So once again, this all happens at 2 p.m. That's when we get the interest rate decision where we're going to be finding out that they're not changing interest rates. It comes out at 2 p.m. Eastern, as in 2 minutes. From there, at 2:30, we have an awkward half hour. And then at 2:30, Jerome Powell's going to be speaking. That's going to go to 3:30-ish. Then the market closes at 4. And then right after the market closes, that's when we're going to get 3 of the biggest earnings, namely Meta, Microsoft, and Tesla, 3 of the top 10 companies in the world. But right here after the market closes, Microsoft, Meta, Tesla, Lam Research, IBM, Waste Management, Sands Las Vegas. And then tomorrow, MasterCard, Caterpillar, NASDAQ. After the market closes tomorrow, Apple, Visa, SAP. And then on Friday, SoFi, American Express, Verizon, Chevron, Exxon. So we have a lot going on. And that kind of brings us to right now, team. That brings us to right about freaking now, where we are 20 seconds out. Very quickly, in the final 20 seconds, what is your best guess? Up, down, sideways? What is your guess? What is your guess? You only have seconds left to guess. What is it? What is it? What is it? Because we're about to get rocking. We're about to get cooking, folks. 2, 1. Down is the first move. Not by much. and bought right back up. First move is the down move. I don't think that it's out yet because we really haven't moved yet. When are we getting the results? Are they talking about it yet?
Because that's what you do because you're the president.
When's it going to move?
By the way, Steve Leisman.
When's it going to move? All right.
The Federal Reserve pausing after 3 consecutive cuts, maintaining the rate of 3.5 to 3.75.
Now we're going back up.
2 dissents, Governors Waller and Myron, both dissenting, favoring a 1/4 point cut this time. They kept the language that they used last time to signal a pause, saying that in considering the extent and timing of additional adjustments to the target range, that was what signaled a pause last time, perhaps telegraphing a future pause. There was also a noticeable upgrade to the economy and something of an upgrade to jobs. On the economy, they said it expanded at a solid pace, really marking to market what we know out there in terms of what's been happening with GDP. It had said the economy was expanding at a moderate pace. Job gains, they say, have remained low.
So we dropped, unemployment has shown we recovered, and now we're literally right back to where we were.
It had edged up. They also removed some language that said downside risk.
Oh, by the way, Trade of Eight is working again. We have resolved the market data issue impacting a subset of instruments for prop traders.
That balance of risk was towards downside risk to employment. That's gone right now, too. Inflation, they said, remains somewhat elevated, removing the language that said it has moved up. New voters, Hammock, Logan, Kashkari, and Paulson. I want to say the statement overall suggests the heat has kind of cooled down on both sides of the mandate for the Fed. A little bit more relaxed about inflation, though they're saying it's still elevated. More relaxed on employment.
All right, so we dropped, we popped, and now we are giving it back.
And just a little bit of trivia here. I'm pretty sure this is right. We're second time in 6 months that 2 governors have dissented. Waller and Bowman in July, now Waller and Myron this time
and we're
around,
going for the intraday
now
low.
Is for a 1/4, not a 50. Perhaps that's a little bit of coming together. The last time before this past 6 months we had that, guys, was 1993. So still quite a bit of disagreement on the Federal Reserve Market Committee, though perhaps not exactly as much as we've had in the past. Kelly?
So
if you
drop,
had to kind of
pop,
sum it up one more
drop,
time, Steve, just as what
tag
you
that
think the main
65
thrust
key
of
level.
this is, or if there's any real surprise for markets. Do you think that there is one? There's not much of a market
First
move. I mean, the
5-minute
Dow's down
bar.
about 47 points.
I think their hair is a little bit less on fire. And
well,
I guess
that's
I can
good,
say this
that
for
their
me.
hair's
you
not
got
on
two sides
fire.
of the bald head here. You got the 2 mandates out there. A little bit less on fire on the inflation side, a little bit less on fire on the employment side. They're a little bit more like, we're going to wait and see how this all breaks. I reported earlier on your show, Kelly, that there's going to be 2 things: a noticeable break to the downside on employment, or an obvious cooling of inflation. Those things, as you note, the Federal Reserve is above.
Where's our boy Rick? That's a phenomenal question. Where the hell is
Rick?
Rick?
Side of neutral. That's the way Powell.
All right, so we dropped, we popped, we dropped, and now we're coming back. So very indecisive.
Down now, I think, is going to require an obvious kind of break. It's not going to be a kind of judgment sort of thing at the margin. They'll do it when employment looks like it's if it's weakening very substantially, or they'll do it if it's obvious.
We're almost at the point of control at 150
yeah,
here.
Absolutely. Steve, thanks. And stick around. We'll see you again in just a moment.
VWAP is all the way up at 215.
Quickly, Jeff Kilberg, if you
Where's
don't mind,
Rick?
jump in here before
Give
we
us
get to
fucking Rick, dude. This
some
is
thoughts
bullshit.
on what we're seeing play out. This is almost like the halftime interview when they're heading to the locker rooms. We haven't heard from Powell yet. This is very early in the game still, to be clear. But what do you think of this?
Well, 2 dissents is interesting. It's kind of a stalemate if you think about it, because some folks were looking for it to be more hawkish, potentially more dovish. So this stalemate, I think, bodes well. We are going to see some volatility, but
Where's
keep in mind
Rick?
the VIX at 16.
Give me Rick or give me
death.
death.
The fact that we want more out of this press conference.
Uh-oh. Hello? Why did it just cut? Can you guys hear me? I could hear you. My Chrome just shit out.
David brought it up earlier. This press conference is going to be tangible, palpable to see what we can do from now until May, when he supposedly, Fed Chairman Powell, is going to remain in office.
Yeah, so it's kind of
options are not really trending.
It's an old football term where you're on the goal line, you can't score. So it's like the tush push. Sully knows about that.
Yeah, I know. Listen, but I would disagree very quickly.
Nothing like some
get to
football
Rick Santelli
references.
in a second, but David Kelly, I would disagree a little bit with my friend Jeff Kilberg and say, is gold, is it soaring. Gold is soaring. Is gold telling us something about the market's risk, or to your
the
point,
market
Jeff,
has
is
no
it just
idea
its
what it
own
wants to
thing,
do.
and maybe
We
a
dropped,
VIX
we
at
popped,
16
we
doesn't
dropped.
mean that
Now we're
gold's gonna
popping.
move?
Gold is soaring.
We've violently
That's
gone
lots of
nowhere,
liquidity.
folks.
Silver is soaring. That's lots of liquidity. Dollar's coming down. That's inflation.
How's Bitcoin
And
doing?
on balance, I think this is a slightly hawkish statement
Bitcoin,
because they
similar
did put
situation.
a strengthening economy. They
Gold
strengthened their economic
looks just
language.
like silver.
And, I'm a little surprised that
Volatility
that Waller
popped
dissented
and
here.
then gave it
but
back.
That's 10-2 in terms of votes, and getting another 4 votes in favor of cutting is going to be really hard here, given the strength of the economy.
Right, and to kind of bring it back to Brian's question, then everyone who's been bidding up metals and pushing down the dollar and worried about the new chair and how dovish they might be, this statement takes a bit of a breath on all of that and just says, wait a minute, there's still maybe not a slam dunk case for a lot more.
But I don't think that's really. I don't think this is happening because of liquidity to come. I think that's because of liquidity that's right now.
Mm-hmm.
I mean, there's plenty of beer in the fraternity right now without bringing any more in. But I think that's
plenty of beer in the fraternity, because that's a saying.
Pressure on President Trump to come out with an announcement.
That's a saying.
We're seeing a lot of movement, and at the end of the day, if you remember going back a couple of years, at 1530, Henry VIII. He wasn't happy with the Pope's ruling, so what do? He created his own church. So will Trump potentially not be happy with who he's going to be a candidate for and appoint himself?
What are the sayings today? They're making up these sayings. These aren't real
I
ones.
wonder if Trump will treat the Fed chair like Henry VIII treated his spouses. We'll see what happens.
I didn't go there.
I just did. Rick Santelli's in Chicago. He's got a reaction in the bond market. Rick,
got
it's not a huge move in bonds, but I mean, how close are you watching this?
We got Rick.
Soon, at some point, announcement for a new Fed chair.
Yeah, I'm obviously very excited to see who he picks. I have my own thoughts on that, but I don't think any of this is really creating any drama. And that really is kind of a story. Whether it's, the criminal investigation, whether it's the back and forth between the administration and the Fed, all of that gives good fodder for newspapers and websites, but it's not showing up in markets, and it certainly doesn't seem to show up in any of the underpinnings of this meeting or the statement.
He's always spitting the truth. Look at this guy.
Information here, Brian. Look at a 2-day of 2-year and realize that we are dabbling a lot of action today under yesterday's low yields. And we were at 358 before the statement was read. We moved down about a basis point. We moved up about a basis point. And guess where we're at? Right at 358. If you look at a 2-day of 10s, completely different. Yields are doing a lot of work above yesterday's high yields. Once again, that steepening effect, stickiness of the long end. It was basically right around 425.5. It went down a little bit, went up a little bit. It's actually net a little bit higher. Maybe the most interesting trade of all is the dollar index. Dollar index has been moving up a little bit.
Oh, the dollar's going back up after getting absolutely destroyed.
What was a 2025 low close? So it's got some buoyancy. We were discussing earlier. Anybody who looks at a dollar index chart past 2003 sees the amount of time over 100 is minimal. So we shouldn't make a big deal about this. But maybe the biggest story is the normalization of all the infractions central banks did for about 7 to 8 years right before COVID hit, and then they really went off the rails with things like QE4. So I think the bottom line to this discussion and questions to Chairman Powell ought to be, why is gold moving up and are central banks largely responsible?
That's why I asked our good friend David Kelly that exact first question. Rick Santelli, thank you very much. I want to go to my friend Francis Donald of RBC, because I love your view, because we're talking about exchange rates. You don't just talk about exchange rates, you live exchange rates, because you're working for the largest bank in Canada. You live in Canada. You get sort of that multicultural view, and you also have to convert a lot of currency just in your personal life. What is the RBC view on the U.S. Fed and what they may or may not be trying to do or inadvertently doing to the U.S. dollar?
Bring Rick back. We don't need this lady.
This Fed is on the side. Stabilizing. Inflation is elevated. You and I have been through a couple cycles here. You could have paired this statement with a hike and no one would have batted an eye. But markets aren't moving. Why? Because they already know.
Markets
this
are
is
literally
a mark-to-market
pinned.
statement that tells us what we already know.
Yeah.
This is why the Fed is not in the driver's seat. They're in the back seat. Even in this last 10 minutes, we're not parceling comments about this. We're talking about the bond market. We're talking about FX. These are the core drivers of this market and the economy moving forward. The Fed is on the sidelines. They just don't have the green light from the economy, and they are not actually going to be capable of solving what ails the U.S. right now. So what we see right now is that we're going to see a Fed that has to step back, allow fiscal policy and markets to drive the narrative for the next several months at least.
What ails the U.S. economy, Francis?
A whole list of things. We've got enormous
about.
Amounts of uncertainty, not just with respect to tariffs, but also we actually don't know the current state of inflation in the United States. We still have huge losses of data from Q4 that we don't have any clue on. We may be heading towards another government shutdown that's going to pull that back. What is the future of tariffs moving forward, and how will these large moves in markets impact the U.S. economy? How sustainable is that U.S. dollar weakness? All of these are putting big question marks around where we're going next. Meanwhile, we are seeing some weakness in trade-related sectors. And guess what? 25 basis point cuts isn't going to bring back U.S. manufacturing right now. They're facing a whole other set of issues in play. So this is not a particularly interest rate sensitive economy. It's not one that the Fed needs to deal with very specifically. They need to move to the side and allow some of these dynamics to play out.
But if I could put it, Jim and David, just sort of
this is
on the margin a hawkish reaction. It is. The dollar's up 0.5%. It's not a big deal. We haven't heard from the Fed chair yet whether he's going to kind of confirm that direction or not. I think the market's waiting for perhaps a little bit more color on that.
We could come back to that. What's more exciting, folks, if you're just joining in right now, quick recap. At 2 p.m., a mere 11 minutes ago, we found out what we all expected. No change to the Fed fund rate. If you go to, is it Nick Timiraos? From the Wall Street Journal, right here. Nick Timiraos. This guy, he posts like kind of the changes right here. You can see the what happened. Available indicators suggest that economic activity expanding at a solid pace. So they switched moderate to solid. Job gains have remained low. Unemployment rates have showed some signs of stabilization. So basically it's just the quick what is the change, what is not the change. So the cross out was the old stuff. The underlined red stuff is the new stuff. The votes, the committee judges, okay, so they got rid of that. Nothing too crazy. We're exactly where we were. So that's, I suppose, the big change right here. Maintain, blah, blah, blah. So that all happened at 2. In about 28 minutes, Jerome Powell will be will be taking this.
Order filled.
Hang on. I want to see what I want to do here. Do I really want to take this long? It's starting to pop a little. The risk is about 20 points. That's $400. I could risk that.
Order filled.
I could risk that.
Order submitted.
I just took a long on NQ at 63, risking 40, so 23 points of risk. That is within, for these accounts, that's within my risk tolerance. Basically playing the recapture of the EMA cloud. The Mag 7 flow doesn't look so good, but I do see the SPY picking up. So I'm not the biggest fan of the flow I'm seeing on the Mag 7, but part of the reason I'm willing to take the trade I just took was basically from 1230, but even more so here at 148. A little bit of a pop in the flow. So it's been really, really, I guess, I don't know. It's all over the map, up, down, up, down, up, down. But we're starting to see a little bit of an uptrend here. And then, like I said, from a risk-reward perspective, I'm willing to risk. I have it at 40 right now. If I had more room, I would prefer to leave it at 20. Do I want to risk 20? Of course, right when I do it, it starts to take a little bit of a hit. It was just a basic technical entry on a recovery of the EMA cloud, but I'm already getting smashed on that one. So that's a fucking bummer. What would this risk be? Do I like 31 better? The risk is currently at 31, but do I just want to cut it right at 40? And I'm talking about NQ. It's on the screen right now. Icarus fired because it basically started to recover, and then I saw the S&P 500 flow. These periods are just such a pain in the ass because trading on FOMC is silly. To clarify, I am only trading on my new small evals. I'm not doing anything crazy by any means. Once again, I'm keeping all my degeneracy today specific to just those evals. I am not trading the big apexes at all. In my opinion, it's just not worth the risk reward. But I currently have a long at 63. The risk was at 40. I lowered it to 31. I'm going to give it a second so we can cover, but I don't know. I started to see this recovery, and you can kind of see it a bit here where it got hit, started to recover, and then I took that trade, and right away, a minute later, it started to dump on me. So I'm going to give it a second. It's unfortunate because the initial position, that first thing that you heard where it said order filled, I was actually short because obviously all the trends were down, and it kind of wicked me out on that, which is a bit of a bummer, but let's wait. Let's see how it plays out. More exciting than those bets are these bets. If you are just joining in right now, not only are we going to see a crazy market reaction, damn, I'm about to get stopped out again. Not only are we going to see a crazy market reaction just due to the press conference and what he says, and not only the prepared statements, but also his answers to all of the questions from the large group of journalists. But we are going to make it a little bit more fun by actually betting on certain words. What will Jerome Powell say during his January press conference? I bet yes to the word credit, no to the word dissent, yes to median, no to pandemic, pardon, QT/quantitative tightening, recession, yes to restrictive, no to subpoena, yes to tariff inflation, no to Trump, no to volatility, and the big one is no to Trump. I put half the account, $1,000 account, $500 on him not saying the word Trump, so that's a big thing that we do not want him to say. He didn't say it last time. In fact, last FOMC meeting, he really had an aversion to saying any word that was like spicy or dramatic. Like he wouldn't say dissent, he didn't say Trump, like wouldn't say recession. So we're kind of learning from last time and seeing if we can get it properly this time. So that's one of the big bets. And then one of the other big bets, pandemic, that's a decent one. What was restrictive was another decent one. I think that was a $90 bet. So we're listening for certain words, and other words we are praying he doesn't say, but this is all for the press conference today at 2:30. So not only are we going to be watching the craziness of the market, but we're obviously going to be seeing what in the world is either happening here or not happening here. So that's pretty much the skinny on the situation. Are they bringing Rick back? No, they themselves just trying to kill about 30 minutes of time. Mag 7, not really doing anything. The SPY was up, and then just my luck, as soon as I get into a position, it starts to turn there. There was some call buying from 1245 up until about 212. It's taking a little bit of a hit right now, but I would say ever since the afternoon, ever since the lunch period, the trend is more so generically up, except this recent hit is obviously not so enjoyable. The market really isn't moving much at all right now. We are very evidently stuck in some sort of holding pattern here, and I guess the name of the game is what we are doing for the next 12 minutes. So we just got to wait. We got to have patience. And then from there, we'll see how much of hell is really breaking loose. But I do want to let you know, what is this? Fed no longer judges downside risk to employment as rising. Very bullish catalyst. But it also means that we're probably not going to be getting a rate cut for a while. So it kind of depends on what you're looking at to define it as bullish or not, because if they don't see any issues in the labor market, then they have no real reason to cut rates, because inflation isn't necessarily like absurdly above their target. I'm about to get stopped out again on that. Well, I guess this is what I get for playing stupid games, trading before Jerome Powell speaks. I just thought I'd be able to get in on a nice trend beforehand, get my stop to break even, but nothing but whip city for me on this side at the moment, which is why I'm extremely happy I kept it to kind of like, I can't say that they're not my non-serious accounts. Obviously, I care about all my accounts because they all cost me money, but I care obviously far more about the bigger accounts. All right. Well, folks, the White House, S&P 500 hit 7,000 for the first time ever. America is back. 7,000. Yeah, what they don't tell you is part of the reason why that happened was because the dollar's been vomiting. As the dollar gets devalued, as it's getting debased, obviously anything that we are valuing in that particular term, as in USD, if that's getting devalued, it kind of has to go up just to retain its same value. So this pump in the S&P 500 is not as impressive as you think it would be, because literally we're valuing it in US dollars, and US dollars are becoming less valuable. So that's a conversation that people really don't want to have, but hey, it is what it is. Don't let me ruin your party. Mag 7 still doing nothing. S&P 500 picking back up a little bit here. 10 minutes out from Jerome Powell going, which means we have a perfect amount of time to remind you, if you want a TPT account, use that code Goonie, all in. It's 40% off all in by the time you get upgraded to funded is about like 102 on Apex, 90% off on the eval with code Goonie, all in costs around like $97, something like that. So pretty much the same one. These are the two best deals currently running. TPT, use code Goonie, and then Apex, use that same code Goonie. And 90% off the eval there, 40% off the eval here. Slightly different rules, but at the end of the day, roughly the same cost. And for today, code FOMC. Like I said earlier today, about 23 to 24 different emails of people reaching out saying, hey, Matt, I didn't get that free code for one entire free month of the Goonie Trading Discord. Can I get another one? And I didn't want to, but so many people reached out that I'm trying to be a nice guy here. An entire free month with that code FOMC. It's pinned to the top of chat. It's in the description of the video. FOMC. You can test drive the entire Goonie Discord for free for a month. If you like it, great, stick around. I think you're going to find a lot of value. But for whatever reason, if it's not exactly for you, just cancel your account within the first month and you're never going to get charged. If you don't cancel your account, you're going to get charged. There's no refunds. This is your warning. Be an adult, manage your account. But within it, you're going to find a lot of great things. You're going to find out my 0 DTE trades, my swing trades, the Piper system, a bunch of filmed lectures from the past of stats of the market, AI trading systems, a bunch of education stuff, a live voice chat, a live written chat, there's general chat. Every single morning I do a market analysis of what I'm looking for that day, the positioning of the large players. All that stuff is out there. Test drive it for a month. I think you're going to like it. But if it's not for you, I understand. No harm, no foul. You can just cancel your account and it's not going to cost you anything. So like I said, pinned to the top of chat in the description of the video, sign up, link your account. If not bringing up Discord, when you try to link your account, try a new browser. Some browsers do block you might have like a block up or a pop-up blocker. So for example, if it's not working on Chrome for you and you're like, wait, I'm hitting join server, maybe try it on whatever, Safari, Mozilla, Brave, something like that. And also if you have any problems, issues, just reach out to me. Contact right there. This goes directly to me. It's me answering. So just leave me your name, your email, your question. So if you have any problems, reach out to me and I will personally be responding to you. But like I said, FOMC is how you get free entry for an entire month. And after this, basically, the code's going to end. I think it technically won't work after like Friday. I want to say it's for today, but if I'm being completely honest, I think it works up until Friday. But anyway, after this, I'm going to have to spend more time in there. So I'm not going to keep doing this code stuff because there's other things I want to do in the Discord. So my focus is going to be on that. So just want to let you know. Need to verify your age. If you're signing up on mobile, especially on an Apple iPhone, there is like age restriction stuff, which that is not a Discord issue. That is not a Goonie trading issue. That's literally Apple iOS. And you can change your age restriction stuff on the desktop web app. So go to the web app of Discord in your account and update your settings. But if you're having age issue stuff, once again, that is exclusively Apple iOS. You can't change it on your iPhone, but you can change it on the web app. So if you're doing this all with mobile, you might have a little bit of a tougher time. It's definitely easier on your actual computer. So just wanted to call that out. So you can only change it on the desktop. You can't change it on mobile. It's an Apple iOS thing. So those are the two issues I'm seeing. Unfortunately, I can't do anything about the Apple iOS thing. I know maybe I look like Tim Cook, but I don't run Apple, so I can't change their rules. So the fix there is attempting to do it on a web page. And if you're on a web page and when you're trying to, after you pay and everything and use that code, which once again, the code FOMC, you do that at checkout right at the end. There's a coupon code section. But after that, if you're trying to hook up your Discord and the pop-up's not popping up, try it on a different web page. You might have just installed a pop-up blocker, and that's the second biggest issue I'm seeing. And if you're having an issue beyond those two, like I said, just reach out to me. So just wanted to call that out because I have a feeling that within 5 minutes, I'm going to get distracted. So like I said, pinned to the top of chat in the description of the video. And this is going to be the last deal for a bit. So if you don't sign up, hey, that's on you. And my account is finally back in the green. Finally. All right. This dude's going to get talking in about 5 minutes here. Icarus is going to fire again at 75. The question is, do I have the balls to take that trade? Icarus, it's either 73 or 75. Icarus is going to be firing. I'm going to look over here. Icarus is the trading system that I have that fires entry and exit signals. It doesn't auto trade for me. I could easily make it auto trade for me. The reason I don't let it do that is because I skip a lot of the signals because Icarus doesn't have any exposure to options flow. So what I like to do for me, and Icarus is a system that I made myself, I wait for the signals and then I double check the options flow to make sure that I like it, that like if it's entering along, but then the options flow is dumping, I don't want to take the trade. So it basically paints the signals over on my chart here on NinjaTrader, and then I double check the options flow, which is why I come back to this so often, because I'm always looking, is Icarus firing? Yes or no? Then I look at the options flow to do a sanity check, and then if I like the trade, I like the trade, and we rip it. So just want to call that out. Can we see Icarus on Discord? No. Icarus, the reason no is because it would be a little bit too confusing in terms of, like, I just like kind of barely put it together myself with vibe coding. So there's a lot of aspects of it that only make sense to me. And I think it'd be one of those things that it's a little bit too dangerous to be just like willy-nilly giving out because it's code that's like barely held together by random stuff that I've done. It's weird symbols, weird things that like literally only make sense to me. I guess I could put in effort to try to like clean it up and make it a little bit more like sane. But we already have like a variant of that coming into the Discord. So like it would be kind of double dipping. So there is already something similar. It's not the exact same thing, but trust me, you wouldn't want Icarus because it'd be more confusing than anything else. You'd look at it and you'd be like, dude, these symbols you would actually think that I'm like severely addicted to drugs. If I'm being completely honest, you would be deeply concerned about my like mental welfare. You'd be like, dude, Matt's losing it. Like the symbols, the icons, you'd be like, this guy's actually fucking nuts. And I think many of you already think I'm nuts, but it would be like confirmed. You'd be like, he needs help. So to kind of save yourself from the scary voices that I hear in my head, I'm gonna have like more of a refined, reasonable version coming out, but you don't want it as it is. You would look at it and it would make Matt Stream make a lot more sense. You never know. You never know. All right. Where are these streams? Where in the world are these streams? It's always tough to find a good one with audio, but Fed schedule. No, Fed calendar. Fed schedule, Fed calendar. Which one do I want? This is the calendar. So this just came out. Statement on longer run goals and monetary policy strategy. That's no big deal. Shout out to my producer. We're getting the CNBC link right here, which he's rocking in about 2 minutes. They're pretty on time. This isn't like one of the presidential ones where it might start like an hour later. When they have this stuff scheduled, it's pretty spot on. You know what we're going to do? We're going to bring this over. Whoa, scared the shit out of me. Whoa, let's chill there with the music that's gonna copyright strike us probably. All right, let's get this rocking. All right, we're gonna watch him, listen to him, but we're also gonna have up the market. So we're gonna kind of double screen this one. Hang on, public good. Where are we on this one? We're just getting it all ready to rock. All right. Where are we? Let's see how this looks. We're on the proper one over there. So if I switch to this, it should be working. Cool. You guys should be able to see that. Let me just clean it up a little bit. Let's just clean up the edges. I know you guys expect perfection from me, so I'm going to give you perfection. All right. Clean it up a little bit more. All right. He should be starting in a moment's notice. I have a trade on. It's not a good trade. I just wanted to feel something today. But I'm basically break even. on this trade. There's nothing like really too special going on. But where's the volume over here? Whoa. Okay, I understood. Hang on. I'm going to mute that for a second just so it doesn't blow your eardrums out. Are you kidding me? Well, that's crazy. We just dumped from 72 to 25 like it was nothing, which is 100% my fault. The move here is always to basically just wait until he starts talking and then identify the new trend. So we're going to see if we can somehow make some magic out of this one. All right. Get ready. Get ready, get ready, get ready. The volume should be good. Let me know when he starts talking. Thumbs up, thumbs down for the volume level. Here's where we're at in the grand scheme of things. The Qs are at the high from yesterday. The SPY's almost at the low from yesterday. Silver did get hit. Oh, is he going? All right, here are the words we're betting on.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued
Wasn't
to
that
expand.
a word? No, restrictive.
In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter.
I didn't take that one.
In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including
Mag 7 took a hit,
layoffs,
S&P
hiring,
500
and wage growth
did as
show little
well,
change in recent months.
But kind of flat now.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
All right. Time for the show.
Hi.
Order submitted.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case.
We got some words here.
And Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say?
Do not say subpoena.
Secretary's criticism?
Do not say Trump.
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented.
Don't say subpoena.
And, I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on.
Good. We're safe.
The job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really 2 questions. One is, so we're getting through the
lots of sellers at 75. If you're bullish, you're looking for NQ to break through that.
They were in November. They're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed
almost
the
took out
statement,
75.
Let me pull it out. Was simply
there we go. Battling it out. There we go.
Judges that downside risks to employment rose in recent months. So we saw data coming in
VWAP
which suggests some
210.
signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling, and so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those 2 reasons, we thought we would take that language out of the statement.
Nick Timmeros from the Wall Street Journal.
Nick Timmeros, the Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it.
Oh, hell yeah, dude. He's not saying shit.
I'm just not
He's not saying anything on this one, dude.
The economy and what we did today, but
he is
and some ancillaries. I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that
Don't say
today.
it. He's not saying it, dude. This is easy money. He is tight-lipped, brother. He's not saying shit on it.
Radio TV.
He's not saying anything on it. I knew it, dude.
As a governor
should have bet the
of the
house.
Federal Reserve, and if so, would you tell us what it is? And if not, when might we anticipate a decision?
He's not saying
no,
shit
and
on it,
I really, once again, have nothing for you on that today. That either.
Mag 7's getting hit.
Why would you
Spy doesn't know
want
which
to
way to
leave
go.
it all under the circumstances?
Again.
Dude, he's not going to say anything. We should have taken every note. This guy might as well have been mute for this meeting.
Not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, what's your view on the market movements?
Dude,
what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department
shoot these odds up. He's not saying shit.
Their
team.
role, their bailiwick, and we stay off it. We do
look at all these notes.
And some
94,
things,
86, 92, 95.
Stop, Bill.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting
we lost Powell for a second.
Evidence of stabilization. So it's overall a stronger forecast, really, if that's your question.
No real trend yet.
I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made...
EMAs are flat.
What we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Order filled.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you.
Spicy there, Steve.
You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that.
Updating my risk
by one.
To the recent low.
And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible.
But really, no
trend. This is the higher end of that range. But so for some people, they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. And, it's in the eye of the beholder, and of course, no one knows with any precision. So, is that you had a follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Amira Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to probably both diminished a bit. So we'll be looking at that. It's about how you weigh the risks to the two goals and how big those and quantify them. And so there are different views on the committee, and we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, ex the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices,
tariff
and
inflation
then starting to come down, assuming there are no new
You're already
major
saying tariff
increases that are begun. And that's what we expect to see over the
He
course
says
of this year.
tariff increases. We need tariff inflation. He's right
that
there.
That would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risk
median is not looking good.
The data just get worse. We'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that.
Dude, he's not saying.
That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished.
Order submitted.
But they still exist, so there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate.
Go. No, dude, don't do this to me.
Quite notably in the last couple of weeks, I believe. Is there any concern on that front?
Don't do this to me. Buy a tick, dude.
I recently looked at all of the survey and market-based short-term inflation expectations.
Pump it, pal.
Target filled.
They were in a good place at the beginning of last year.
There you go.
Around Liberation Day.
That's how you pass your accounts. 3K, 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 3K.
Inflation
That's
expectations
how
have
you
remained
do it.
in places that are
That's
very
how
consistent
you
with 2%
do it.
inflation over time. So
You want to pass those
expectations
accounts
have been
90%
solid,
off,
they
and you
reflect,
just degen it,
confidence
folks.
in
Take
the return to
advantage of
2%
it.
inflation.
It's so easy. You just rip it. You just rip it.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that
Easy
still true?
peasy. Now say the word credit and
You're
median.
right. We saw the labor market weakening, and we acted. And I think that was the appropriate thing to do.
Wordy
We
crush
We
restrictive.
will always act
Tariff
to
inflation's not
address
feeling good,
what we
team.
see as the economy moving away from our goals.
Dude, I'm telling
Risks
you,
to
the
both of
no's are the way to
variables
do
a
it.
little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Where's silver?
Thanks.
Why do I not see
Anna
silver?
Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to
There's
resume
oil.
easing? Do you need to see further
There's
deterioration in the labor
Folks,
market?
what
or
is
would
the
it be enough
contract for
inflation to
silver?
soften?
So we'll always be looking at both things.
I thought it was
And so
SI.
there could be
Why do I not
combinations,
see it?
Infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But
Where
what's
is it,
happening with
though?
inflation? If inflation were at the same
SI,
time getting worse,
SLV.
you just have a very difficult situation there. So we'll be looking at both.
Am I blind?
Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making
SLV,
similar judgments
but
to
where
on
is it?
inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right
Am I
now.
blind?
Anybody's
I
base
don't see
case
it.
That the next move will be a rate hike, but ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
SIH.
Victoria.
How do you
Hi,
add
Victoria
it?
Guido with Politico.
SIH.
I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term
break my
economic
computer?
outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So
here we go.
It's more of an over time thing. The U.S. federal
Is
budget
this
deficit
wild to
is,
trade? I've literally never traded silver in my life.
Controversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit.
Is it crazy to
full
trade?
Employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either.
It's
but,
$5K per dollar.
Does it reduce the effect of your rate cuts that long-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less
I've never ever
financial
traded
conditions.
this.
But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate, over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
Dude, whoever told me yes on
More
meeting,
broadly,
fucked me
what
over
would
on
happen
that.
to
All the no's are
American
going to hit, and all the
households if
yeses are going to miss.
Federal
I'm
Reserve
telling you,
loses its
we have
ability
one
to
yes
operate
hitting.
independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context, this is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith.
I don't know if the Fed's that credible to begin with.
We're making decisions.
That's not even a hit on
only
Powell.
the
Just in
basis of
general,
our-
most people hate
of our
the
assessment
Fed.
of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Order, Bill.
Archie Hall from The Economist. On that sort of stabilization of the labour market question, how much do you see the weakening we saw over the past 6 months, a year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labour market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by
we have those
a very
accounts
sudden
to do
stop
some
in immigration.
degenerate shit
So
with silver.
many
I've
outcomes
never
were
traded
possible
it.
with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's
All right,
happened.
we have
with
5
that
fresh
part.
accounts
But if
to
you look
see
at
what we could do
other,
with silver. Never traded it.
Things like, for example, just to pick a couple.
Feels like I'm a little late.
The Conference Board's measure of job availability that came out.
How
I don't
many
know, was it
contracts
yesterday
do you
or
guys
today?
normally trade
But,
at once for one of
It
these?
shows, it's a survey showing that workers feel
I've
like
never
job
traded silver. How
availability
many
is- it's a very low
contracts?
reading.
It can
Just
kill
one
you in
reading,
seconds.
but it's an
Are you trading like
indication
10
of
contracts?
softening.
How many contracts are you trading?
People, part-time for
2?
economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
Is 3 too many?
You don't have much of the fiscal I think the outlook, you're right. It's financial conditions, and it's.
I think we're going for 9K of profit
for 26.
That's like the goal. Is it crazy to trade
strong
3?
Consumption that's been happening before financial conditions have been
Trade
supported,
5
before the fiscal.
I think I could trade up to
effects really
17.
are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but. The economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative.
$25 per contract for .005 move.
Downbeat surveys
so each,
and reasonably good spending data.
Wow, that's huge. That's a monster.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation.
That's
you talked
big,
about those
dude.
customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits.
This is crazy.
So we're seeing that, and that is a reality of what we're seeing.
Dude, this is so much money for the smallest movement.
They're feeling it in a different way.
Silver contracts are fucking degenerate.
We have a vast network through the reserve banks and also through the board of governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability.
That's
and we take that very
insane.
seriously, and we take it to heart, because one of our jobs is price stability. And so, the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And, of course, anyone who uses it is amazed at what it can accomplish.
That's insane.
Every technological wave.
Yeah, of course it blows out. All right, so 4 is way too many.
And it's always been the case.
Holy shit.
Wave after wave after wave. There will be some disruption.
Intense. Why the fuck are people trading this?
Increases productivity, which is the basis for rising wages. And it may not all happen immediately.
That little movement from there to there on 4 contracts was 5K.
Over time is rising productivity. So,
holy
we always ask,
cow.
this is going to be different. Is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that.
Some people need to feel alive.
We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies
trade the
saying,
17
contracts
contracts.
that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address
from
the
down
concerns
here
that may
all the way up
arise,
here.
but we have a
so
lot of people
much.
who focus on
so
analyzing
much money.
Try to understand what the macroeconomic implications
If you're trading
are,
that,
which
you
is-
have
which is our
problems,
job.
man.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far are we
He
off
said
the target
beige
is,
book.
As I mentioned
He
in my
needs to say
opening
credit
remarks,
and
we're-
median.
We had 3%,
He did say
3.0% core PCE
restrictive.
inflation
I don't think he's
over
saying
the 12
tariff.
months ending in December. And
Say
that's
core
pretty much what we
inflation.
had the year before. So on net, no progress. But the story behind that is modestly positive in that most of the overshoot was in goods
Silver's
prices,
calling you.
which we think is related
Just
to
gotta rip
tariffs.
it.
And
Play the
ultimately, we
breakout.
think those will not result in
I mean, these
inflation
little
as opposed
pump,
to a
rip,
one-time
like,
price
this is just
increase.
so
Okay, so
much.
That's where it is. In terms of, you asked, no one thinks they will, ex ante understand really
Mag
clearly
7 is picking up
precisely
since
when this will happen.
245.
But there's an expectation
SPY
that
is,
sometime
I guess,
in the
the same
middle
thing.
quarters of the year, we'll see tariff inflation topping
Those
out.
pumps are
So what
10K,
we do
that's
is
just
when
ridiculous.
a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm
4.5K
Richard
per
Escobedo with
point.
CBS News.
It's just so
I want
insane.
to look outside the U.S. about what's happening outside our shores and how it impacts the U.S.
Here we go.
Canada's
Tariff
Prime Minister said
inflation.
last week
He clocked
that
it.
there's been a rupture in the global
Boom,
order. And I
boom,
wonder how
boom,
you're thinking
boom,
about
boom,
geopolitical
boom. We're
risk
nailing
as
it today.
relates to the
All
U.S.
right.
economy.
He needs to say credit
So
and median.
I can't comment on that.
Those are the last two.
Speech or statement or anything like that.
You got tariff
geopolitical risk
inflation.
for us is a lot of it is around
Easy. Didn't doubt it for a
energy,
second.
oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been
Final
passed through to
two.
consumers
We're
yet.
almost running perfect. We have
taken
two
by
more.
companies
Median
that stand
and credit.
between the consumer and the exporter. So that's where that is.
The big money is on not saying Trump.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle.
Just took a
I'm
hit
not-
there. Look at that.
I'm
That
not
probably
saying this is
blew
what's
people
happening,
out.
but,
I'm
there's
dumbfounded
growth,
by this.
And there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-twos for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is
he hasn't said anything about him yet.
Our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers.
7 picking up a little bit. Spy's definitely picking up. Look at that flow alert.
I have worked hard at it. So,
Spy popping.
And the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being.
Did anyone bet on cadre?
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model.
I think pandemic was the word. I didn't bet on that, though.
It was not in the model. A trade war of
Dude.
this scope.
Fuck,
we've never
I said
had
no
that
to pandemic.
in 100 years.
Fuck.
And,
I thought I
so
didn't
there's
bet on it.
great
He didn't
uncertainty
say it last time.
At different points.
How?
Another thing I'll say is,
fucking me.
you know, when it comes to, you know, technological developments that raise potential output.
Last
some kind of
question.
Technological renovation,
Nicole
you know,
Goodkind, you
revolution
fucked me.
like happened in the 90s here and like maybe happening now
Nicole,
with AI. We're all over that. And, you know, everyone
have a
studies
problem.
those periods. And, you know, we're very clear-eyed about the possibility that this higher productivity may persist.
Last
and also that it
question,
may
and
not.
Nicole
You know,
did me in.
we're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking
It felt
about it for 3
personal,
years.
right?
It
It felt
long
like she knew
predates the
this
current
stream.
situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth,
He did
labor
say
market, and all those
recession.
things. That's all in our models. I mean, if it's just a question
I
of
can't
using
believe
better
Nicole did that
models,
to me.
bring them on. You know, where are they? We'll take them. But I think, you know, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months.
Don't you
know,
say
the trade
Trump.
landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all
Gold
of the
new all-time
all
high.
of the tariffs.
Silver almost.
At the beginning, it was very much of a
SPX
forecast.
new all-time
Now
high.
it's every cycle
Almost
that
on the
goes by,
cues.
it becomes more informed by actual data, and you know our forecasts were not far off.
ASML new all-time high.
What changed was, as I think I said earlier, what changed was what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the
Google's
other thing is
looking
that
good.
pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay.
That's
Thank you very
all
much.
she wrote, folks. Dude, I was good until the end. I was so solid until she had to get in the question. I was losing on credit and median. I blame you guys on that one because you're like, oh, he's definitely going to say it. I wanted to take all the no's, and I was good on, look at that. No. Like some of these were just so clear. Pandemic, bit of a surprise. He was refusing to say that last time. I'm surprised he snuck it in at the end, but hey, I guess it is what it is. Hang on, let me clean up the stream here. But overall, we ended up slightly net up after all those bets, so I'm pretty stoked about that one. The big bet was no to Trump. We bet 500 on that, got 600 back, so pretty stoked. I guess throughout the stream, I pretty much learned that trading silver is crazy. I tried to just quickly pass a couple 150K accounts there, and it went away very rapidly. I can't believe people are trading silver. I mean, granted, maybe I shouldn't have been trading 4 contracts of it, but hey, you live and you learn. That was the first time I ever traded silver, and you guys have problems. To all the silver traders in here, you guys, you need to talk to someone because that is some incredible degeneracy you have going on. It was going up or down like $2,000, like it was absolutely nothing. That's insane. So that was a little bit fun just to try it out, do a couple trades there. The market overall kind of unimpacted by all of this. If we look at it, like we did start to bounce back. Whatever the intraday high is here on the SPY from this morning, that is the all-time high. I see silver and gold still catching a pretty solid bid ever since about 2 p.m. today. So heading into this, we sold off just to bounce all the way back. I cannot imagine how many people got blown out by this move just for it to revert all the way back to where they were anyway. That must be frustrating. Remember, if you want a new SIM to funded account, TPT, code Goonie, 102 all in. Apex, code Goonie, about like 97 all in. 90% off there, 40% off there. But by the time the dust settles, when you pass the test, pretty much all going to be the same cost, like pretty close. These are the two best deals. Once again, code Goonie there. And what's absolutely free is if you want to join the Goonie Trading Discord. It is for today. When you're checking out, if you want that free month, use that code FOMC. FOMC will give you an entire free month where you could kind of hang out, see what it's all about. I got some messages about like what's in the Discord, what's not in the Discord. It's easier for me just to give you an entire free month so you can test it. You don't have to take my word for it. If you like it, great, stick around. If it's not for you, just make sure to cancel your account within the first month and you're not going to get charged anything. Set an alert on your calendar, do whatever you need to. If it goes over a month, there are no refunds. That's on you. Be an adult about it. Understand how to either keep an account or delete an account. So that is for today. Once again, that code FOMC pinned to the top of chat in the description of the video. Folks, before I let you go, I guess summary of overall this, we got the exact result we expected at 2 p.m. Little bit of a dip till 2:30. He got talking. We got a slight pump. Nothing crazy. Nothing to run home to mom about. Kind of a muted move. Crazier pump in silver and gold. But in terms of SPY, QQQ, little bit of bullishness there. Kind of setting us up for a retest of that 7,000 level. And I'll be looking for that tomorrow. 7,000 is going to be the big battle. Pretty much the all-time high, which is currently 702. But this is setting us up for an interesting day tomorrow, which is going to be very dependent on the earnings results tonight of Meta, Microsoft, and Tesla, and on top of that, IBM, and I think Lam Research as well. Lam Research, LRCX. So those are all reporting right after the market closes today, so please pay attention to that. Tomorrow, we have initial jobless claims right before the market opens, like 8:30 a.m. ET, and then after the market closes, we're going to be hearing from Apple. And on that side note, I don't really like trading Apple, but if you do, I just want you to know the options flow on Apple is very strong. So we're about 24 hours out from Apple's report, but at least what we're seeing in the options flow today, even though the stock took a hit, people are more than happy to be selling a bunch of puts there. Granted, they're not really buying calls, but they are definitely selling puts. So I guess I just wanted to put that on everyone's radar before we head out. Folks, that is what I have for you today. Of course, if you haven't already, don't forget to like, subscribe, and turn on those notifications. For whatever reason, I know a lot of the times YouTube doesn't show me when I'm live, when I'm actually live. So a better way to do that is turn on your notifications. There's a little bell icon. Click on that and set it to all instead of personalized. Personalized basically means nothing. So anyway, turn on those notifications. If you have any questions on the Goonie Trading Discord, you could email me. There's a contact page on GoonieTrading.com. I will personally be responding to you. I try to get back to everyone within 24 hours. I personally don't like when I reach out to customer service and it takes more than a day. So I do my best to get back to everyone within a day. And generally, I'm getting back to almost everyone within like 4 hours. So trying to be as quick as I can because like you, I'm addicted to being on my phone. So as long as I'm not sleeping, there's a good chance I'll be getting back to you relatively quickly. So if you have any questions, reach out or just figure it out for yourself by using the free month with that code FOMC. Code Goonie on Apex and TPT, currently the best deals. Get ready for earnings tonight. We're going to be streaming once again tomorrow morning, 9 a.m. bright and early. I hope to see you there. And then other than that, if you're trading silver, may God be with you because that shit is crazy. Like I said, if it's you, you have problems, man. You legitimately have problems, and I hope you crush it. But I thought NQ was high octane and crazy, and I'm comfortable with that. Like I'm kind of used to that. But silver is, you guys have problems. Like you guys have legitimate problems. So you might want to figure that one out. Anyway, that's what I have for you. I appreciate all the good vibes. Don't forget to subscribe on your way out. Best of luck with the rest of today. Best of luck with earnings. And I'll catch you guys again tomorrow. Thank you, thank you, thank you. Peace.